Hello everyone. In this video, I'd like to review the performance of IDFC Premier Equity. There have been some concerns by some investors that the performance of this fund has dipped and the star fund manager has exited and what they should do now. So I would like to review the performance of this fund by looking at its Morningstar page, in particular its risk and rating tabs. Now, if you scroll down this page, you will see um, something known as upside and downside capture ratios. Now, let's first understand what these ratios mean quickly. So, now this is over 1 year period, the upside capture ratio. The upside captures are all denoted by the green arrows, which are facing up. And the downside captures are denoted by other numbers next to the red arrows, which are pointing down. Now, an upside capture over a 1 year period of 101.8 means that the fund has captured 1% more, 1.8% more returns than the benchmark during the times when the benchmark gave positive returns. And a downside capture of 79.5% means that the fund has only captured 79.5% of the benchmark's losses. So if the fund had captured 100% of the benchmark's losses, then it's not a good fund in terms of active management. So it has only captured 79.5% of the benchmark's losses. So that's pretty good. Now, what's given here are the upside and downside capture over 1 year, 3 year, 5 year, and 10-year periods. And on the top row, you have the fund's upside and downside captures, and on the bottom row, you have the category averages upside and downside capture. So you can notice that over a 10-year period, that the fund has only captured 97.9% of the benchmark's positive returns. Whenever the benchmark gave positive returns, the fund only captured 97.9% of it. But if you head over to the value research page of the same fund, it's easier to view it there. Over a 10-year period, the fund has bet the BSE 500 spectacularly. Over a 10-year period, its return is 21.8%, and the BSE 500 has only given 10.6%. So that's spectacular outperformance. And that spectacular outperformance stems from the fact that the fund, during the time the benchmark has given negative returns, has only captured 72.6% of those negative returns. So over a long period, downside capture as low as possible is more valuable than an upside capture which is high. Now, if you look at the downside capture of this fund for these different intervals, you can see that over 10-year period it has captured only 72%, over 5 years a spectacular only 58%, over 3 years 64%, and over 1 year 79%. Now, if you look at the category averages and compare it, the fund has always had a downside capture which is much lower than the category average, and that means that the fund has got spectacular downside performance. It is an excellent fund in terms of managing downside risk for the investor. Now, the fund has never had a very good upside capture. You can see the upside capture is only 97, 90, 94, and about 101. What I think is worrying investors is that if they look at over a 3-year period, other funds have done better in terms of upside capture. If you look at the category average of the upside capture for 3 years, it's 104, whereas IDFC Premier Equity has only 94%, which means that the category on an average has got 4% more returns than the benchmark when the benchmark did well. And IDFC did not manage that. It managed it. It only could capture 94% of the benchmark's successes, but it is scored in the downside, and that's what matters. But if you look at only the returns during a bull run or when the benchmark moves up, then IDFC has not done well. But if you look at times when the benchmark has fallen, then IDFC has protected investors by falling lesser than the benchmark. and a consistent downside protection as good as this, I think is pretty good, and I think there's no reason for investors to be worried about IDFC Premier Equity, because the fund manager, the star fund manager has left, a new person has come in, and so on. I think these are great stats by any uh, yardstick. Now, getting back to this value research page, you can see again over, you can see the outperformance here over 10 years, 7 years, 5 years, and so on. It is always bet the category average by a great amount, and by a very significant amount, and also, I'm sorry, the benchmark by a significant amount. Also, it is also done not done pretty badly when you compare the category averages. Just in the last 1 year, its return is lower than the category average, 9.7 versus 7.3, which is okay, and it's marginally lower over 3 years. I think there's really nothing to worry about uh, with respect to this fund's performance. I think investors can, as far as I'm concerned, I'm not an investor in this fund, but these numbers are very good, and I think they can stay invested. You can also get an idea of performance graphically. These are annual returns of the fund, which is the red rectangle, the benchmark, the black rectangle, and the category average, the gray rectangle. You can see that year after year, the fund has bet both the benchmark and the category average. It's only here in the last year that the performance has dipped just a bit. But other than that, I think it's quite fine. And I don't think you can get funds which have got a better track record than these. I mean, if you're going to be looking for funds which are always going to be at the top, I think you will be unhappy more frequently. I think these are excellent numbers, and I think IDFC Premier Equity is a terrific fund to stay invested in. Catch you again soon. Bye bye.